In today's episode, we will cover the exchange traded fund, in short known as the ETF. So if you have your pen and paper ready, let's start. In today, we will cover what is an ETF. You'll be able to understand what is an ETF, real examples of ETFs in the market, and the risks or benefits of investing in ETFs. If someone asks you what is an ETF, let me give you a simple example so that you can understand. Imagine you want to buy a basket full of toys, but you don't have time to pick each one. So someone makes a ready-made basket for you with different toys, like cars, dolls, puzzles, all at once. It's in one basket. That's a ready-made ETF. So when we use money language, you can say an ETF is a basket full of investments like stocks, bonds, gold, or real estate. So those are the toys, the stocks, the bonds, the gold, the real estate. So you can buy one basket and you automatically own a part of everything else inside. Later on, we will cover the categories of ETF. ETFs are sold on the market just like company shares, and you can buy an ETF at any time during the day using your trading app. So it's so easy to invest. But remember, before you make any investment decision, consult with your personal finance advisor. Early on, I mentioned ETF categories. So I want to give you another simple example to help you understand. Let's say you like fruits, but you don't want to buy each one separately. You love apples, bananas, pineapple, oranges. So a fruit basket ETF would let you buy a small slice of all these fruits at once. A bond ETF lets you own many bonds like government or corporate loans. By now you understand what a bond is. I introduced it in an earlier episode. Secondly, we have a stock ETF that lets you own many stocks like Apple, Microsoft, Safaricom, large companies that can be grouped as one. Then, a gold ETF lets you own a part of gold without buying the physical metal. So, when you're going into the market of investment, you'll be given the different categories and you'll select according to your age, according to your budget, and that we will cover in a different episode. So I will expound more on the categories. Number one, we have the ETFs that hold the US government and corporate bonds, and it's good for you if you want steady income and safety. A good example is the AGG iShares Core US Aggregate Bond ETF. So if you want steady income and safety, go for such an ETF. If you are more interested in ETFs that hold short, medium, or long term US bonds, you can go for the Vanguard Total Bond Market ETF. This one is good for you if you want growth and stability. And also, you will consider your age because if you choose a long term investment, you have to be there to enjoy the returns at the end of the day. Any questions or comments you have, put them down in the comment section. I will cover it in a different episode so that you can be able to understand. Remember, I'm your finance bestie. So, third, we have an ETF that holds the biggest US companies. So, this one, if you want to invest in big companies like Apple or Google, you can choose the Vanguard S&P 500 ETF. I also mentioned that you can trade using gold without owning the physical metal. So, number four, we have an ETF, the GLD SPDR Gold Trust ETF. It holds physical gold and it's good for you if you want to protect your money during tough times. So, you go for such an ETF. Remember, investments have risks. So let us cover the benefits of investing in ETFs, which can help you now make a decision on whether to invest in an ETF or choose a different instrument. Number one, diversification. Remember, you're not putting all your eggs in one basket, you own many things at once. I think now you have grasped the meaning and understanding of what an ETF is. Number two, they are low cost. It's cheaper than buying each bond or stock itself. Remember, you're just buying a slice, a slice, a slice, a slice, the way I have explained. Number three, it is easy to buy or sell. Just like you buy your airtime using your phone or you make purchases online, that's the way you'll be trading the ETFs. Number four, they are safer because you have many items in one basket. If one item in the basket fails, others can help balance it. Number five, when you come to income, some ETFs, like bond ETFs, give you monthly or quarterly interest payments. So, something you have to be aware of when you are investing using ETFs, if the value of the whole basket goes down, your money can drop too, but that is rare. Also, if the ETF is in dollars and your local currency weakens, it may affect your gains. But generally, ETFs are safer because it is a mix. A recap of this episode is that an ETF is a basket of investments you can buy. It can hold stocks, bonds, gold, or real estate. It lets you own many things with just one purchase. It is cheap, easy to use, and helps you to protect your money by spreading risk.